It's been a very eventful week in the ag marketplace. Plenty of grain news and even more livestock news for the markets to react to. And we're taking a look at the daily market summary. I'm visiting with Maree Johnson of agmarket.net. And first off, Mary, what do we see in the grain markets to end off today and the week?
Sure, it was a rough week in the grains to say the least. So we ended with July corn down another 6.5 cents. We did settle at 417 and a half. December was off a nickel at a 446 even settle. Beans broke down the later half of the week as well. July finished down 7.25 at 1121 and a half, with November only off 2.5 at 1137 and a half to close. Cattle were the bright spot. Live cattle and feeder cattle both posted gains the last couple of days. Front month feeders ended up at looks like 353.90, with the front month live cattle just over 250.
So then when we look at those soybean prices, you mentioned down again today. They were down big yesterday as well. What's been the big mover behind that? Because it felt like there wasn't necessarily one big headline to push it down.
No, I think that things have just kind of slowly piled on this week. Corn obviously was down hard all week. We had Argentina's crop see some improvements. I think they're up to 64 million metric tons now. That's quite a bit larger than we typically see in the past. I think this market really wanted to see China come in and start buying other ag products when that $17 billion purchase agreement or expected purchases was announced. We just haven't seen that. The weather's not threatening. We've really put the heat to this crop this week. So I think it was just a bunch of little things. And sometimes when you start fund liquidation, we can go up like an escalator and down like an elevator. And that's what we saw this week.
And you mentioned, of course, we wanted to see maybe some more specific details and some more action from that agreement with China. If we don't see any of that moving forward, I mean, what's that going to do not only to the market situation, but the demand scenario?
Correct. So there is still time. Just because we haven't seen China come in and purchase to this point doesn't mean that they won't. The last several years, they have been coming in later and later, but when they have shown up to buy, they have been buying huge quantities. I will point out that the $17 billion number was issued in a White House fact sheet. Everything that's been issued in those fact sheets so far has happened, maybe on some adjusted timelines, but it has happened. This wasn't something that was put out in a tweet like the additional 8 million bushels of soybean demand that never materialized. So I do think China will be in. The problem with the $17 billion is we don't know what that commodity mix is going to be. It would make sense, knowing that they didn't have the best corn quality last year, that some corn would be in the mix. But you've got beef, you've got dairy, sorghum, a lot of other commodities that could start to make up that $17 billion.
And then when we look at those livestock markets, of course, the big headline was New World screwworm this week. But we know that the livestock markets are, a little more anticipatory than they are reactionary. And it did feel like when we got that news, even though it was a big headline, a lot of that risk seemed to be factored in already. Was that the case?
I think so. We were quite anxious going into the Thursday morning trade because every time that we have seen a rumor of a US case of screwworm, we have gone limit down the following day. So we did not anticipate having a limit up move on Thursday. We are sure glad to see it because we fundamentally, if screwworm is going to get a foothold here in the United States, that is bearish. That is something that would continue to take more cattle out of the supply chain. Uh, I don't like the fact that it's here in June. It's got all summer warm weather to try and get a hold. But yes, I think as those Mexican cases started getting closer and closer to the border, we started to see the markets trend lower. And like I said, long term, this is not a bearish thing for the feeder market. So I think the reaction was appropriate.
I agree. It was feeling like there was sentiment where it was not if, but when we would
Mhm.
finally see that case. And then moving on to like the hog market side of that reaction, like I mentioned, we were at World Pork Expo for earlier this week, and the hog industry, the screwworm can make it into the swine herd as well, but we haven't seen that so far, and really feels like with the markets not even consider that yet, unless it were to happen in the swine herd.
Screwworm getting into the hog herd is not something that we had really considered, that I had considered anyway. Yeah, certainly that's a possibility. I think the biggest thing at this point is if you are a producer that has livestock, animal husbandry becomes incredibly important. Watching your herds, especially the young ones that are vulnerable, making sure that you're taking top-notch care of those animals, just like we know that producers in the U.S. generally do.
All right, Marie, lots of great information today. For anybody who would like to get in touch with agmarket.net for more information, how can they do that?
Sure, you can reach me on my direct line here, 641-638 6090, or at agmarket.net. You can see any of our brokers.